Good morning, traders. Welcome to the latest edition of Talking Bull. I'm Joe Neighbour from Signal Centre. Last day of the trading week. Hope you've all had a very good one. It's the 15th today, and yeah, it's been a pretty eventful week. There's been lots going on in the markets, both on the news side and also very much on the price action side as well. So let's get stuck into the latest headlines and what's moving markets over the last 24 hours. So first up, the Fed Governor Waller stated that he would support a further 75 basis point rate hike this month, but could lead towards a larger hike if retail sales and housing data come in materially stronger than expected. So we'll be keeping an eye on that. We've got retail sales later today. The US PPI inflation accelerated. The producer prices increased 1.1% for June, above the expectations of 0.8, and the year-on-year increasing to 11.3. In terms of the yields and the bonds, Waller's comments had a notable impact yesterday. There was a scaling back of speculation that the Federal Reserve could sanction a 100 basis point rate hike at the July policy meeting. And we saw the US 2-year yield retreat to near 3.1% from highs of above 3.25%. Some concerns going on over the political situation in Italy. Prime Minister Draghi offered his resignation after a confidence vote yesterday, but that was rejected. And there is going to be, well, continued uncertainty, certainly, over the political situation in Italy for the foreseeable future. In terms of the euro, that recovered from below parity. Yesterday, it slumped below the key 1 level, hitting fresh 19-year lows at 99.60. However, we did see the pair manage to recover that slightly on the back of a small correction on the US dollar. In terms of what's going on with England and the Bank of England in particular, the Deputy Governor Ramsden stated that the central bank will not let inflation get out of control, and interest rates are very likely to have to go up further in order to stop a repeat of persistently high inflation numbers that were seen previously in the 1970s and the 1980s. In terms of what's going on in Asia, in particular China, Q2 GDP contracts. They reported a second quarter GDP decline of 2.6%, with a year-on-year increase at 0.4% compared with expectations of 1.5%. So quite a big miss there on that data point overnight. So let's move on to the charts and take a look at the key markets at the moment, starting off with the dollar index. And as we said, there was a mild correction in that yesterday. We saw prices run up to this resistance level that we've got on the chart at 108.74. And please, obviously, from a technical perspective, that level has seemed or seemingly done a job. So we pushed high as on the session 109.29, but managed to close below this resistance level. Pretty flat as things stand at the minute. So we'll wait and see if the bulls have the impetus to drive that higher. If we can get a decent close above that 108.74, then we'll be looking to target this 78.6% fib level at 110.25. So euro US dollar, we saw that plunge below the parity level, which we've got highlighted here on the chart. So this isn't particularly a support level as such. It's just more the psychological impact that one level has on this particular market. And it seems to be being defended by the bulls quite vigorously. So we saw prices move down as low as 99.52 actually on the all sessions chart yesterday, and we managed to close back above that one level. So this level is being pretty robustly defended as things stand. But of course, you know, the overall trend remains bearish, and if we do get a break below this level and close below it, particularly on a weekly basis, because obviously we're on Friday now, then I think that would be pretty damning for the pair and suggest that we are going to see lower prices emerge. Looking at cable, we saw a pretty decisive close below support yesterday at 118.75. It's only mild support, but clearly no signs of the selling slowing there, down by 0.1% as things stand. And we are now looking for a move down towards this level here, which is at 114.10, which was the low that we posted at the height of the pandemic, as you can see there. So that would be pretty significant to get a retest of that. And of course, we'll wait and see how well that level is defended. But really, it all links back to the dollar index because that's driving everything for the time being. In terms of US dollar, we saw a pretty strong breakout yesterday in dollar CAD, ripping through this resistance actually at 130.76. Closed well off of the best levels of the session, but still remain comfortably above this new support, which was previous resistance. And looking for higher prices here, we've got a next target level up above, which is a 50% fib level, which comes in at 133.40. Dollar yen, take a look at that as well. Pretty rampant, no signs of that slowing down. So a combination of dollar strength and yen weakness here. We highlighted the big round number at 140, and we look to be edging towards that pretty well. It probably won't take very long, to be fair. There's no signs of reversal in this market at the minute, so it would be advised to not stand in the way of that market at the minute and continue to go with the underlying trend. Let's move it on to cryptocurrencies now. Looking at Bitcoin, this continues to be coiling really for now, trading within this triangle pattern. It can't really make its mind up where it's going, so we're seeing a bit of indecision. If we can see a break above this 21,840 level, then that may complete what may be a triple bottom pattern actually on Bitcoin, and we could see higher prices head towards 26,137, which is the measured move of this potential bottom pattern. And above that, we could look for an extension towards 28,742, where we have a confluence of levels to potentially target on the upside. A break below the low of the 13th of July, which we posted a bullish engulfing candle. If we remove that from the equation and break below that, the low being 18,892, then that would signify that we are likely to see a continuation lower in the price of Bitcoin. Looking at Ethereum, some mixed signals here as well. So we broke below this triangle pattern and looked to be heading lower, but we've reversed that quite sharply, posting actually a bullish engulfing candle a couple of sessions ago on the 13th, and we backed that up yesterday with further gains. So we're edging closer to this important resistance level here, which comes in at 1282. Again, if we can break that, then what we may be doing is forming a triple bottom pattern here on the chart, which would be pretty significant, certainly for short-term price action. So we've got a bottom. Let's just move the chart. We've got a bottom here. We've got another one here, and we've got a third one here. So that would be a pretty nice move. And then from that, the measured move target on the upside comes in at 1682 and then extension of that 1930. So that would provide some decent relief potentially for some of these cryptocurrencies. If that is to play out, it's still got a fair amount of work to do before we can get overly excited about that. But as we know, crypto markets are 24/7. So there is a chance that could happen at some stage over the weekend potentially. So keep an eye out for that. I think that's quite an important level to target on Ethereum. Looking at commodities, it was an interesting session actually for oil, which is where I'll start. So I've identified here a head and shoulders top on the Brent contracts. If we look at the WTI, then we've got a bit more structure in terms of a double top potentially forming here. But what we saw yesterday was a pretty significant move to the downside. As you can see here, we've actually formed a pretty long-legged doji, or maybe even a hammer candle actually. So we made big moves to the downside, but recovered that. It was pretty well defended, to be honest, yesterday. We're on the back foot again today, down by around 1.5% or 1.2% on Brent. So yeah, yesterday we saw this big move to the downside, held up just in front of the 61.8% fib level, and the buyers stepped back in to pretty much close the contract where it opened on the session. So that's a pretty significant turnaround there. But we need to see if it's got any upside impetus to drive prices higher in the very short term. As I say, we're on the back foot again today. So if we get a close below this band of support, I think that would be pretty negative and probably, for me, complete this double top pattern, which would then indicate much lower prices to be seen over the medium term. The measured move of this double top, so taking a measurement from the high to the low of the pattern, projecting it lower, actually comes in at 58.16 on WTI. So potentially much more downside to play out on this one if we see a completion of this double top pattern. Looking at gold, obviously it continues to be a victim of the strength that we're seeing in the US dollar as things stand. So we had some support here that we highlighted at 17.22. We saw a close below that level yesterday, and we're backing that up with further losses as things stand. So remains under pressure. The next level of support to target is at 1676. So no signs really of that slowing, certainly no indication of reversals on the candlestick charts. So stick with the dominant trend for now. Similar situation with silver. This level, the 61.8%, and this yellow support line that we highlighted from these previous highs back here in 2020 failed to do a job yesterday. We saw a pretty aggressive red candle posted, closed off the worst levels of the session, but still, I think the damage was done there with the close below that level that we'd highlighted, the 61.8% fib level, and it looks as though lower prices are likely. So the next major Fibonacci level that we have is the 78.6, which comes down at 15 spot 6. So potentially much further downside potential on that one as things stand. So do be careful if you're speculating on silver. It looks as though it's broken a pretty significant level there, and as a result, lower prices are likely. Looking at some of the base metals, copper taking a pounding, although it's into a 61.8% fib level as things stand. So we'll see if there is any appetite to defend that level, but it's been a really aggressive sell-off here on copper following the completion of this top pattern, and there are no immediate signs of reversal on that. So we'll be keeping an eye on that 61.8% level today, see if there's any indication of buying support to close off the week, but that's going to be looking pretty ugly, I think, and looking as though lower prices will be seen there as well. Moving on to indices, let's take a quick look at the Aussie market, just because it's got quite a fair or quite a large influence of commodity stocks and is driven by a lot of what these commodity markets do. So we've got significant resistance up here, as we highlighted. We broke down by taking out this swing low from the 26th of January. That level now acting as a pretty decent resistance level. That's at 6,757. Bit of a coiling effect going on here as well, attempting to break down below that yesterday, but closed back above this short-term uptrend. So there is scope for maybe a correction towards this level again. But if we see a convincing close below this short-term uptrend, then we'll be looking for lower prices. The first port of call will be the swing low that we posted here on the 16th, 17th of June, which is the 38.2% fib level. So we'll be looking potentially for another retest of that. Taking a look at DAX, we saw that hover again close to this key support level that has done a decent job now. So 1st of March, we originally formed that support. Then we saw a retest of it on the 5th of July. We saw another test of it yesterday, and prices were supported. So while above that level, there is scope for a potential corrective move higher, but overall the trend remains bearish. So for me, I prefer lower prices here. That's where my bias is. We've got a 50% fib level below at 12,130. That'll be the next level to target on the downside if we get a close below this 12,431 level. Looking at NASDAQ now, again, decent defense of this short-term uptrend, this triangle pattern or this wedge that seems to be forming on the chart. The bias would be for a break to the downside in line with the dominant trend, because these are consolidation patterns and typically they can signal continuation of the dominant trend. We formed actually a hammer candle yesterday, and a pretty decent one as well. So maybe there is scope for a bit of a move to the upside here. Need to take out this 12,225 level on the upside, and if we can do that, then we may see a decent correction to the upside. Although only expected to be quite short-lived and temporary, because the overall trend remains bearish. If we take out these lows that we've posted, so I'd really be looking for the 11,455 level to be taken out. If that occurs, and being on a Friday as well, I think that would pretty much set up the tone for where we'll be heading over the summer months into the summer holidays, and the likelihood is that we will see lower prices. The 61.8% fib level at 10,500 is the level that we're watching for on the downside to potentially play out. But at the minute, it's a little bit indecisive, but ultimately I'd be sticking with the dominant trend here, which still remains to the downside. So 12,225, break above that, we're looking for a corrective move to the upside, although may only be temporary. A break below the low here, 11,455, and we'd be targeting the 61.8% fib level. S&P 500 again, decent move yesterday following a bit of weakness. We posted a hammer-ish looking candle, I suppose, but we're still below actually this short-term uptrend, which may signify that there's going to be some selling interest here, and we are going to see lower prices. So the 3,500 level is the first target to look for on the downside. That's a big 50% Fibonacci retracement level. The measured move of this head and shoulders top comes in at all the threes, 3,333. So potentially looking for ultimately prices to go down towards that level. And finally, let's take a look at the FTSE 100. We saw a pretty sharp move lower yesterday, triggered by, I think, that selling that we saw in oil, which is why we saw it close a little bit off of, or significantly off of the worst levels of the session. But this really is a choppy chart at the minute. No real sign of it going anywhere. It is holding up pretty well compared to some of these other major indices, but overall limited opportunities here. I think we're going to see maybe prices head towards the 6,958 level, which is this 78.6% fib level. If we take out the low that we posted on the 20th of June at 6,966, then that could spark more downsides towards these lows that we posted back in March. Okay, that's that for the roundup on the markets. And now what we can do is take a look at the gun to the head trade that I did yesterday. I'm really struggling with this at the minute. I don't know if it's just a sort of choppy market conditions, but basically the gun to the head trade is where each of us on the video, obviously me at the moment because we've got the other two off, pick a live idea on the video. We talk through it. Try and set up a decent trade from a risk reward perspective. All the ideas have a stop and a target. They're all published at market, and we close these ideas off at 9 p.m. or when the stop or the target is hit. So yesterday I actually took a speculative look at palladium. All these ideas, by the way, are published to our TradingView profile, signal_center, if you want to check those out. So we saw a decent pullback yesterday in palladium. It hit a 61.8% fib level. So for me, that was enough of a reason, I suppose, to think about a speculative long. We can see there's a short-term uptrend in play here, but there was further selling in commodities yesterday, which meant the trade idea was stopped out. So no good for me on that yesterday. Was looking to target nearly a 5R return on that one, which of course would have been very nice, but not to be. So it's Friday. I've got to pick another idea. Markets are pretty choppy, and I imagine as we are at the end of the trading week that we may see some choppiness in the price action. So yeah, I've got to try and find something today that tickles my fancy. So normally the way I do this is I'll look at the hourly charts and look for some indications of things moving around this sort of time of day, which will then hopefully lead to a bit of momentum to continue throughout the trading session. So I'm just going to have a quick flick through some bits here to see if anything particularly stands out, and then I can get a trade on. Let's have a look at what we got. So I like to use the 10 period moving average as a bit of an indicator. If we get a close below that or a close above it and we see a decent move through that candle, then I like to use that as a trigger for further momentum. Nothing particularly standing out in the currencies, not much on the cryptos either. Anything going on in the commodities? Okay, oil. So here's what I'm looking at. We've got a close below the 10 period moving average. Let's just zoom that in so you can see. So here, decisive close below the 10 period moving average. So for me, that could be an indication that we are about to see some more downside play out. So clearly we've established by looking at the weekly chart, the daily chart, that a double top is potentially forming here. We did have a look below yesterday, maybe flushed out a few stop losses in the process, but this is a very big band of support and I think it's under pressure, and I believe we're going to see a continuation lower here. So for me, I'm going to look at an intraday setup here. I'm going to sell WTI at a current price of 92.41. And now it's just a case of finessing this to try and make sure we get decent risk reward out of it. So if I'm going to target the lows yesterday that we posted at 88.22, then I need to tighten this stop loss in order to make the risk reward ratio worthwhile. So I'd ideally like to maybe have a stop above there, but because the risk reward ratio isn't particularly good, always 2-to-1 or better is what we want to see. So I'm going to target a move down to 88.22, and I'm going to have a stop loss at 94.22. Looking for a risk reward ratio of 2.3 on that one today. So pretty tight parameters for my trade idea today. So this is the kind of zone that we're looking to act potentially as resistance. Let's just draw this on with a rectangle. So we're going by this low, and obviously we've got a decent cluster of price action here that potentially could stop prices moving higher. Seeing a bit of a rollover to the downside, going to target a move to retest those swing lows. So, I mean, obviously, if it does start to get down there and take those levels out, then we could see prices move pretty aggressively following that. But I'm just going to target a move down to those lows yesterday. So that's my trade of the day. Okay, day ahead. We got a couple of bits of data out today. We most notably have got US retail sales, which are due out at 1:30. Now, we saw the Fed Governor Waller reference retail sales as to whether or not the Fed are likely to take any further action at the July meeting. So 75 basis points, pretty much priced in, I'd say, but there were some discussions or speculation around 100 basis point rate hike. So if these numbers come in worse than expected, then that may be a cue for the Fed to shift their stance. At the same time, we've also got the New York Empire Manufacturing Survey. And then at 3 o'clock, we've got the US University of Michigan Consumer Confidence. So a couple of bits to keep an eye out for today on the economic side. And next week, we look to the UK inflation data, see if that matches up with what we're seeing in the US, which it's probably likely to do. And we've also got the ECB policy meeting next week as well to focus on. So that's pretty much that for today. Hopefully it's been useful for anybody watching. And hopefully you've had a pretty good trading week as well. There's been plenty going on to keep us interested. So I'll wrap it up there. Have a fantastic weekend, everybody. And I'll be back on Monday when I'll be joined by with Jamie. And yeah, we'll set you up for next week on Monday. Have a great weekend, everyone. Bye-bye.